Hello and welcome to day 2 of the Green Recovery, brought to you by Project Syndicate. I'm Jo Coburn and welcome to Can Green Business Be Good Business, where we'll be looking at the challenges and solutions to making the private sector a force for good on green issues. And if that wasn't enough, we've got lots more in store for you. Later today, we'll be hearing from Abiy Ahmed, Prime Minister of Ethiopia and winner of the 2019 Nobel Peace Prize. Gordon Brown, former Prime Minister of the United Kingdom, who played a key role in coordinating the global response to the 2008 financial crisis. And Kevin Rudd, Australian Prime Minister at the same time, and under whose stewardship Australia became one of the few countries in the world to avoid a late 2000s recession. But to kick things off, we're going to start by looking at whether green business means good business. And joining us for this session, we're delighted to be joined by an extremely distinguished panel of economic superstars. Mariana Mazzucato, Professor at University College London and Director of the Institute for Innovation and Public Purpose at the same institution. She's also the author of a stack of best-selling books, including The Value of Everything. Jim O'Neill, Chairman of Chatham House and previously the Chair of Goldman Sachs Asset Management and a former Minister at the UK Treasury. He also famously coined the phrase the Bric Countries to describe Brazil, Russia, India and China. Rebecca Henderson is a Professor of Economics at Harvard, where she's one of just 24 researchers to have been awarded the title University Professor. She's also the author of Reimagining Capitalism. Ayla Crevi is Head of Capital Markets at the European Investment Bank. She was previously at the Union Bank of Finland and Société Générale and is an internationally recognised authority on sustainable finance. Welcome to all of them, and we'll be hearing from them in just a couple of minutes. But first, here's former British Prime Minister Gordon Brown on why international cooperation needs to be at the heart of any green recovery.
I want to thank you for attending this conference today and hope that all of you are in good health and safe from the COVID disease. We have got to find a cure and we've got to find a vaccine soon. Whenever I talk to young people, before COVID, during COVID, and no doubt after COVID, the concern that they express most is what is happening to the environment as a whole. And that is the purpose of this conference today, to investigate what's happening, to look at solutions, and to press for change. I've been involved in environmental issues since Rio in the early 90s, the Kyoto Conference in 1997, Copenhagen in 2009, and I applauded all those who made possible the Paris Accord in 2015. We managed to bring in the corporates and bring in cities to a new climate agenda. We created a fund for adaptation and mitigation that is to help the poorest countries of the world face up to climate change. We set ambitious targets and the coastal states helped us so that we have to pursue vigorously carbon reductions in every country. There's been a hole at the center of everything that we've done on climate change for the last 20 years. If we only implement nationally determined contributions, we cannot get to the global result we need. When I was at Copenhagen in 2009, there was disagreement on who was to be the chair, disagreement on what the agenda was, and eventually disagreement on what we could achieve. The one central point that we addressed then, but we could not find a solution to, was how countries will feel that they are obliged to implement the national targets that are set, and how these targets can fit into a global regime. If we had been creating an environmental agency and an architecture for managing climate change in 1945, we would have been radical. These were the years when we understood that prosperity to be sustained had to be shared, when we created new international institutions with power to change things. We appeared to want economic justice and social fairness but we didn't include environmental sustainability in our aims. Now we must find an institutional architecture by which decisions on the environment can be made. We know the science can help us. We know massive research is being done. We know that renewables are moving forward at pace. We know that companies and cities want to do more. We created the International Space Station in the 1990s. Russia and America, two sworn enemies, managed to come together to work together. In that space station, there are Russian and American astronauts working together. When Ronald Reagan met Mikhail Gorbachev in the pre-Reykjavik conference to discuss the nuclear issues, Ronald Reagan, who was interested in Star Wars, said to Mikhail Gorbachev, "If an asteroid attacked us, would you come to our support?" Gorbachev immediately said, "Of course." Reagan said, "We too." It is the we tooism of working together, of building a future that is sustainable by solidarity and cooperation that we need now. This conference will advance this task, and I thank you for your participation.
Former British Prime Minister Gordon Brown. Now, if you'd like to join the conversation or help share the word, please do get involved on social media using the hashtag #TheGreenRecovery. Now, in just a few more moments, we'll be coming to our panel to discuss whether green business means good business. But first, here's a reminder of the issue. Now, in about half an hour, we'll be hearing questions from editors and journalists from around the world. But first, let's talk to our panellists. And let's start with you, Mariana, because businesses are constantly flaunting their green credentials these days. Does that inspire confidence in you that they really are taking the environment seriously?
Well, I think we need to start having proper metrics that define not only corporate governance, but especially how business interacts with all the other so-called stakeholders, right? We talk about stakeholder value, but we don't actually look at the relationship. So, COVID, I think, is the perfect testing ground because you have, billions or trillions globally going into the economy from the public sector to sort of save the system, but we have to avoid what happened with the financial crisis, which is that money went in without conditionalities for business. So instead of talking about what business has to do, reforming and rethinking the partnerships themselves. So, for example, public investments, even without talking about COVID. So any sort of, public investment, for example, in drug innovation or in renewable energy or in different types of subsidies and guarantees that companies get should be conditional, in fact, on transformation of those companies. And what we've seen, transformation towards achieving societal goals, right? More inclusive growth, more sustainable growth. And under COVID, I think it's been fascinating how we've seen some of that in countries like France, where Macron was actually quite bold when he said that we're not here to save industry, but to transform it, so that the support that both Renault and Air France received was conditional on those sectors actually reducing their carbon emissions. Whereas, for example, in the UK, we just gave a massive giveaway to EasyJet.
Right. Well, on that point, Rebecca, you're nodding your head. Do you agree with some sort of conditionality for companies and metrics to actually measure whether they are doing the right thing in terms of the environment, not just saying it is or having some sort of advertising to back it up?
I completely agree. But I think it's also important to remember that companies have a strong business case in many industries for moving in this direction, and that metrics are important not only to see if they're living up to their commitment to national governments, but also to inform their shareholders, their customers, and their employees as to whether they're really making progress. Auditable, replicable, material metrics are fundamental if we're going to transform the economy.
Right. Ayla, do you agree with that?
Yes, thank you. I very much agree with that. I mean, in the EU, we are working on metrics on some of these activities, some more coming in the future years.
What sort of metrics?
Yes.
What sort of metrics are you working on?
Well, I'm talking about the EU taxonomy, which is defining what kind of activities are aligned with the climate goals, for example, that we have, and other environmental goals.
Right. I mean, Jim, I heard Mariana there say the UK could do a lot more. But when it comes to green investments providing strong returns, it is true, isn't it, that sometimes making green business decisions are more expensive. And isn't it reasonable for businesses to prioritise their profits over their green credentials?
That probably would have been an easier thing to go with 5 years ago, certainly 10 years ago. But amongst the fascinating things going on with markets during COVID is growing signs that company leaders strongly demonstrating innovative ways of dealing with the green challenge or the climate challenge are being rewarded. No better example, although it's got its own oddities, of course, of Tesla in the auto sector, which, notwithstanding the big declines of the past week, is massively valued relative to conventional auto producers. And then the other example is directly within the oil produce or the traditional oil producing sector. Shell became a distinguished leader of the British sector, and then very interestingly, again, particularly during COVID, BP, I think, was actually in its latest quarterly earnings guidance or statement, was basically commended by Greenpeace for the shift it was making. And partly because of that, its share price rose by 5%.
Right, Rebecca.
So I think we've entered that sort of rather nice position where it's sort of almost becoming a direct financial incentive. And we need to think of ways of more smart interventions to add to that companies see it's a source of future value and excitement.
Well, everyone wants to come in. Rebecca, what did you want to say?
I love Jim's optimism, and there are certainly cases where firms are being valued for their investments. But for many firms, I mean, we're in the middle of a pandemic and perhaps a massive global downturn. And so sometimes, absolutely, firms are being forced to make non-green decisions, to make brown decisions. And I think that's why, exactly as Jim hinted at, we also need government policy to make sure that firms have incentives to do the right thing. Yes, there's movement. Yes, investors are excited. But my goodness, there's a large number of firms for whom ESG and environment is still very much a second thought.
Jim?
I mean, that indeed is what I'm hinting at. And I've written a couple of pieces, in fact, one, sadly, not via Project Syndicate just yesterday, but certainly more than one on Project Syndicate in recent weeks and the past few months, all about how any government that's considering state support to help the private sector to recover from COVID, I think it goes back to Mariana's opening comment, should be completely conditional on credible policies. And specifically in the UK, I'm now an advocate of some kind of domestic version of a sovereign wealth fund. And one of the main conditionalities would be anybody that wants to get any benefit without really credible 2030 net zero emissions business planning, you have no chance of getting it.
All right. Mariana, do you share Jim's optimism?
I don't believe in optimism and pessimism. I believe that the details matter. So just to sort of come back on something that Rebecca mentioned, because I think it's really important, which is that this shouldn't just be kind of a stick, right? In order to grow, at least in the long run, so this is one of the kind of assumptions we're also making, that companies are interested in long run growth, which isn't always the case. In some cases, there's a lot of sort of short term and speculative and kind of capital just moving around. So if we're talking about those companies that actually want to be there, it's kind of 10 or 20 years time, and so thinking about their long-term growth, not just short-term profits, then actually getting in early, transforming your value chain properly in a green direction, which is currently kind of a choice, but will very soon be mandatory, they're going to have a head start. Because what we know that actually characterizes innovation dynamics are dynamic, increasing returns to scale. So in other words, you can actually build advantage and get lower cost, and innovation leads to future innovation. So those companies actually doing it now are potentially really kind of investing in their long run competitiveness. But the other thing is, just coming back to those conditionalities, just to give you a really concrete example, in Germany pre-COVID, when the steel sector there asked to get bailed out, and steel, just I'm sure everyone knows, globally continues to be asked to get bailed out, there are strong conditions that steel lower its material content. And so the loans they got, for example, from their public bank, the KfW, was conditional on that. And today, steel in Germany is one of the most innovative steel sectors. They reduce their material through repurpose, reuse, recycle, not because they went to Davos and said, oh, we need to be stakeholder value driven, but because the loan they received was conditional on that transformation.
Let me bring Ayla in. What do you have to say on this?
Yes, I think the question is not so much that do businesses have, can they afford it now? It's more like, how can they afford not to? And yes, let me take an example. Let's say around 40, 50 years ago, perhaps, at least in Europe, it became forbidden to dump your waste into the sea. This is what everybody had been done. Industrial corporates, they just dumped their waste into the sea. And one day it was forbidden for obvious reasons. And I don't think, I don't remember, but I don't think this was preceded by a discussion. Can you afford it now? Would you like to have 5 more years to do this? Or would you like to have 10 more years? It was decided that this is not acceptable anymore. You have to treat your waste yourself. Yes, there was an additional cost. Maybe it also created some new jobs, by the way, on the waste treatment side. But this is just another thing now coming on a much larger scale than we used to have, for example, this example. And it is another parameter that you just have to integrate into your business model. I don't think you have choice, but I do agree with the previous speakers here that those who do it voluntarily and who do it in advance, they are the ones who gain. But everybody will have to do it ultimately. It's just will you want to save some money for the next couple of months and make a quick buck and then suffer more later, or do you do it now?
And we'll talk about short-termism in a few moments. But Rebecca, isn't the reality that when we speak about businesses reducing CO2 emissions, there are actually a relatively small number of companies who make all the difference? I mean, for example, according to CDP's Carbon Majors report, 71% of emissions have come from just 100 companies since 1988, specifically fossil fuel providers.
It is indeed the case that there are roughly 100 companies who generate products that provide the majority of their emissions. But one of the things we need to do is change the behavior of the people who buy their products so that there's lower demand for them. Really reducing carbon emissions requires transforming not only the energy sector, but also agriculture, materials, transportation. As long as there's strong demand for fossil fuels, the companies are going to keep producing them.
Right.
So yes, I think we need to focus on those big 100 and really push them to have concrete plans for the transition. But we also need to focus on their customers so that we're moving the entire economy in a more sustainable, greener direction.
But what sort of time scale are you talking about then, if you are trying to change consumer demand in that way?
Oh, Joe. We need it to happen really fast. I mean, your video reminded us, or Gordon Brown reminded us, we need to cut emissions in half by 2030. We have to try. I spent the first 20 years of my career as the Eastman Kodak professor at MIT. I studied these kinds of fundamental transformations in large firms. And Ellie and Mariana are, of course, quite correct. Those firms that go first, that are willing to make that leap, often reap the returns. But my goodness, that's a tough transformation, which is not to say we shouldn't try, but we have to be very careful, as Mariana said, about the details, like who is going to do what by when, because we need to move so fast. And we also need a massive social, political and cultural movement. Let me just throw that in.
Yes.
To really make this happen.
You go ahead. It is transformational. I suppose there will be many people that will say, Jim, you've got to bring people with you. And maybe there's a disconnect then between the sort of timescale that Rebecca is talking about and the sort of reality. Gordon Brown spoke about international cooperation. When we look at the current political climate, I mean, do you think that sort of cooperation is possible?
Let's just say it might be a bit easier if there were a change in the US in November. I mean, putting it in its context, one of the main disappointments for me about COVID is this horrible contrast between the fabulous global coordination in 2008, which Gordon Brown was in the center of, and the absence of even a G20 communique when the G20 leaders met in April. And so, they're struggling to agree staggeringly and worryingly on equitable COVID vaccine distribution as and when we get one. So under Trump, it's impossible to seriously pursue what Gordon's rightly on about.
Right. I mean,
but let me just add a couple of other things to throw into the mix here, and I know one of them Mariana will probably have a lot of sympathy for, and I slightly worry some of this is a bit echo chamberish amongst us. But I think if whatever country, and the EU could consider doing this, let me put it to the representative of the EU too. Why not introduce a ban on share buybacks for any company unless it's got a credible 2030 emissions target, for example?
All right, well, let me put that.
That is an equally horrible market failure of modern capitalist economics, in the same way that environmental problems are a result of climate change.
Well, let me put that to Ayla.
Well, I'm not in charge of these policies in the EU, but I mean, I think there have been such measures in the individual countries, for example, that buybacks should not happen. But I think all of these kind of measures, they should be indeed, as you said, on a more global basis than just in the EU. I mean, we are trying hard in Europe on certain measures, but unless you get the global scene to go together, it's going to be very, very tough.
Mariana?
First of all, I think, one of the optimistic bits, just coming back to the pessimism, optimism, is that we're actually living through a semi-Marshall moment period in Europe. There's a massive recovery package. And that recovery package, for the first time, is not conditional on countries cutting their deficits, the kind of old Troika line. It's actually conditional on making investments around climate, so climate change focused policies, but also digitalization and health. And so this is interesting because this is a different type of conditionality. This is kind of like public to public, not just public and private. And I think the way to really complement that would be, again, to bring it back to what do we actually mean by ecosystem and partnership in this battle within Europe. And this issue about share buybacks, I think it's the kind of more umbrella issue is value extraction. So there's many companies that are extracting value, not necessarily creating it, using, for example, tax havens to dodge their tax bill, which of course then gets used for public health, public education, public transport. So they're really, it's sort of a crime in some ways to humanity. And so it was interesting that in Denmark, again, they introduced just very recently some, again, conditions that those companies using tax havens will not be eligible for different types of COVID-related buybacks. And Elizabeth Warren in the US put forward exactly what Jim was talking about, which is that it should also be conditional on reinvesting your profits, not extracting them, so limiting, if not banning, share buybacks. But if you look at how many share buybacks, how much share buybacks has kind of gone up exponentially in the last decade, it's crazy. So $4 trillion worth have been used for share buybacks from the Fortune 500 companies. Many of these companies are in the energy sector and the pharmaceutical sector. And when you ask them, why are you doing it? They say, oh, there's no opportunities for investment. Okay. So it's exactly the opportunities that I think we're debating right here, right now.
A brief pause before we talk about some of the other solutions. Don't forget, though, to join the conversation and help share the word. Please do get involved on social media using the hashtag #TheGreenRecovery. So I mentioned solutions. Ayla, how much of the answer, in your mind, to climate issues relies on changing how risk is understood?
Well, that is essential because risk assessment, for example, in finance has been traditionally about your debt ratios and your earnings and so on and so forth, which is fairly sort of easy to assess, and it's uniform for companies, given that the information is correct, of course. But assessing climate risk is essential, because how can we otherwise lend to the companies who are supposed to be coping better in this environment? How can we ask for the right measures to be done? So this is quite essential. And for example, I have been involved in a lot of the work in the EU about sustainable finance, and this has been one of the very, very key questions. And then, of course, the other question is that we can't assess the risk unless we have the information, and the information should ideally be uniform. So there's a lot of work going on this front about what kind of disclosures you have to make and how often, so that you get comparable information. And yet again come to this word, which sounds very technical, and in a way it is, but it is really the foundation of all of this EU taxonomy for sustainable finance, sustainable activities, i.e. for the first time we have definitions that, and this is very important also for the public side, subsidies and conditionality. You can't just say that, well, you have to make green investment for X% of this money. Well, then green can be this, can be that, but now we actually have clear sort of conditions which say that green is when you do this much and you go this far. If you only do this, it's not yet enough.
Right.
So this is a huge part of the equation. And indeed, as everybody has been saying, governments have learned some lessons from the 2008 crisis, but now we actually have some tools to implement these conditions.
Right, but Mariana, is part of the problem the way we organise the economy currently? I mean, can we really expect the private sector to sacrifice profits when they have obligations towards shareholders and investors to return profits? How can we practically change that to something different?
Well, I think there's two different issues now. First of all, there's different types of corporate governance structures, and thank God they're not all currently just focused on maximizing shareholder value. There are many companies that have actually implemented for decades, especially but not only in Scandinavia, that more stakeholder-driven notion. So, having worker trade unions on the board of the companies and different types of agents which talk about that long-run investment that's needed for long-run growth, and then the direction of that growth towards, different goals, whether it's sustainability or greater inclusion. But I think, what we were trying to do in the beginning of this conversation, at least Rebecca and I, when we said this is actually potentially also good for your own future competitiveness. This isn't just about, fitting some sort of conditions that are imposed on you. If you are a company that wants to grow through innovation, and that is a big if, not every company wants to do that, right? Walmart, Costco, two companies in the same exact business. Costco for a long time has actually been innovating in order to achieve the same profit margins that Walmart was achieving just by, paying workers too little.
Right.
Right. So there's different ways to achieve profit.
Well,
and the real question is who's talking about that within the company. Does a company think it's just there to maximize short-run profits? Or if not, what do we know about what's actually going to catalyze long-run growth, especially when we want it to be sustainable?
Well, let's put that to Jim.
So two things. First of all, in this regard, I want to repeat what I said at the start, that and it might be too optimistic, and I like to think of myself as a really objective person, and I agree with what Mariana said about. But it is the fact that only recently has the equity market started to distinguish in different sectors between those that are being credible about having a completely different strategy as it relates to the climate change issue. And hopefully that's the beginning of a permanent trend. So it just becomes some kind of boom. And it might be, some kind of next major sort of macroeconomic benefit to have all of this investment going into it. The second thing I would say on this issue of profit maximization, and it's something I'm proud in my role as chair of Chatham House to be helping Chatham House to become a bigger and leading voice on, is what I define as profit with purpose. And we need to, because as big as this is, and I've spent a large part of my life the past few years in the battle towards antimicrobial resistance, I would argue that's equally as big a challenge as climate change. And so we need to have profit with purpose, where instead of maximizing just one thing, it's difficult, but we develop a world in which various goals are optimized, and that becomes the norm in business.
Right. I mean, and that sounds great, but Rebecca, is one of the problems here that companies have invested enormously in harmful technologies over the years and now hold billions in sunken assets, which they can't do very much with?
Joe, you're absolutely right. And I was going to throw into the conversation the idea that cooperation between firms is absolutely critical. That if any single firm starts to move in this direction, as you say, they have all these sunk assets, they have a huge organization aligned against the old business model. If firms can, amongst themselves, agree that they're going to shift the entire industry, then they can take advantage of the very significant upside, but without any one of them suffering. And I may sound as though I'm completely utopian, but this is happening. You see it most often in the food industry, where the consumer goods industries, big consumer goods companies have come together and said, you know what, deforestation threatens all of us. We have to get rid of it. More than 70% of the world's publicly traded palm oil is committed to being grown sustainably. You see real advances in beef and soy, or you did before the current administration in Brazil. So I think we have to have cooperation in the mix here as a potential solution.
OK, well, you can sound as utopian as you'd like to. Jim, you famously coined, as I said at the beginning, the phrase the Bric countries for Brazil, Russia, India and China. Now, around the world, those countries are often associated with some of the worst pollution. Is it that simplistic and clear-cut? I mean, how seriously are companies in those parts of the world taking their environmental obligations?
Well, the risk of being provocative, I mean, I would say certainly the Chinese government appears to be taking many aspects of the fight against climate change more seriously than the current government in Washington. And that's important insofar, of course, under the leadership of the Chinese Communist Party, every company, even private ones, has some kind of representation through to the leadership of that party. So I think they are, and unfortunately it goes downhill with the other three Bric countries after that. But in terms of really influencing these issues on a global basis, actually what happens in China and what happens in the States, at least for the next decade, are hugely important, because probably something like 80% of global GDP for the last decade came from just those two places. And if they are both together really serious about this, bringing back Gordon Brown's wonderful comments about cooperation, I think it would put enormous pressure on certainly every other G20 member to fall into line, of which, by the way, the EU is, in my view, actually starting to prove itself as a bit of a more serious and credible leader in this space than I expected would have been perhaps the case a few years ago.
All right, well, before we talk about short-termism, coming up later today, we have our final session, closing the circuit with opening remarks from former Australian Prime Minister Kevin Rudd, which will look at how we can transition to green energy. And following that, we'll be joined by Ethiopian Prime Minister and Nobel Peace Prize winner Abiy Ahmed in conversation with Bertrand Badre. Now, let's return to our panellists and to you, Mariana, because I want to talk about this issue of short-termism when it comes to investment and show everyone this graph. In 1945, as you can see, the average UK investor held a share for an average of 6 years. But by 2015, that had fallen to 6 months. Do you feel complaints about short-termist shareholder capitalism are valid, not just in the UK, but around the world? Does it actually lead to environmental damage?
Yes, but unfortunately, we're rewarding that right now. And I hate to, well, I was told that we're allowed to be provocative, but it was actually Gordon Brown who reduced the time that private equity had to be invested in order to get a massive capital gains tax reduction from 10 years to 2 years in the UK. That was done in the name of stimulating more innovation in the UK. I'm sure he regrets it now, and it's not only his fault. Many different countries have reduced, if you want, taxation rates in pretty foolish ways, which have simply rewarded short-termism. I mean, that capital gains tax is one example, but you know, we still don't have a financial transaction tax. That itself would have fostered more long-termism. And many of the issues that we were just talking about before in terms of corporate governance structures that are more stakeholder driven, you know, that itself can become as we were talking about, a condition.
Okay.
So currently, if we just both deregulate the financial markets to the point, by the way, that today in the UK, I think only something like 20% of finance even goes to the real economy. 80% of that goes to finance, insurance, and real estate. So that's a problem of short-termism within the financial sector.
Well,
in the business sector, this issue that both Jim and I talked about, share buybacks, excessive dividend payouts, this kind of lack of reinvestment back into long-run productive structures is actually being rewarded. So, I mean, just coming back to the green issue, we currently, you know, should be thinking about things like taxing material more than we tax labor.
All right, well,
it's just not rocket science.
You are being provocative because Rebecca's shaking her head. Rebecca.
I really disagree. I have 25 years experience on corporate boards, one of them on a big pharmaceutical company that did high levels of buybacks. And I think, you know, we looked hard for additional opportunities to spend that money. and couldn't see them. We would have loved them. Much better to put the money back into the economy where it can be reinvested more productively. On short-termism, I fear that it's too much of a red herring. Yes, there is some short-term behavior, but we have companies where investors are happy to invest for 10, 20 years. At the pharmaceutical company where I was on the board, Amgen, we invested in basic biomedical research to multi-billion-dollar level, estimated payoff 10, 15 years. What made the difference was we could describe why the long-term investment made sense. This, again, is why new metrics are so important. I think if you can communicate to investors why the investment makes sense, you can do it. Too many firms just say, trust me, it's going to be better. And so investors say, show me the quarterly earning because they want to know the company is under control. But I think we move too easily to short-termism as a boogie. I think there are many more fundamental problems.
Okay, hang on. I'm going to bring in the others. Ayla, just before I come to you, Jim, you were shaking your head to what Rebecca was saying.
Well, I led this global review into antimicrobial resistance and became pretty aware of the practices of pharmaceutical companies. And as I've said, this is a societal challenge which I can easily think, and often do, is probably even bigger than climate change in terms of the known number of people that are likely to die if we don't do something about it. The top 3 American pharmaceutical companies by market value spent more money in the first 5 years of the last decade buying back their own shares, none of whom are active in antibiotic research themselves, than the entire $42 billion we recommended on 29 different interventions. So Amgen may be a very, very special case, but I dispute that too.
Right. I mean, Ayla, can I just put to you, do you think it's a red herring, this focus on short-termism?
Well, I do recognize the problems that both Marianne and Jim were talking about, but I agree with Rebecca a bit that it is a red herring. And often I see that people mix up, for example, short-term finance with short-termism, which have nothing to do with each other, obviously. But I also have seen, working in a large financial institution who is financing large infrastructure investments, that it's not often our capacity to offer financing which is the problem. It is really the demand, and has been in the recent years. And now I think the public sector getting involved with very heavy subsidies and supports may be important in the sense that, and what we have been doing over the past few years as well, is providing risk-taking capacity, because somebody might be willing to invest, but banks, for example, yes, they have been trimmed now, their balance sheets after the financial crisis, but that has also meant that banks' risk-taking capacity is much lower than it was 10, 15 years ago. And they say so themselves, yes, we can provide liquidity, it's cheap, but we can't put much capital to it. And this is what the public sector and firms like us can do. And I think that is also one of the things in this equation.
Jim?
Very briefly, I get what's being said by Rebecca and Ayla here, and I think that the phrase short-termism is misplaced to some degree. It's all about risk and incentive and balance sheet management. The way, and here in America in particular, the tax system almost deliberately encourages strong share buybacks to help boost the price-earnings ratio. And it's almost disincentivizing anybody on the board of Amgen or any other company, in bringing it back to climate change, in the energy space to take proper long-term investment risk. It's just a lot easier to just buy back your own shares, which, by the way, boosts the compensation of much of the leadership of the company.
Right, but Rebecca, is climate then properly built into our current economic models? I mean, how close are we to building working alternatives? For example, do we currently have a better alternative to GDP, Rebecca?
We do. There have been a variety of panels led by economists like Joseph Stiglitz, focusing hard on how we move beyond GDP to measures of natural capital and social well-being. I think that's a central move if we're going to solve climate change and inequality. And let's just say, if we only address climate change and don't make the transition just and deal with the enormous inequities in the world right now, we're not going to get where we need to go. So we have to make progress on all fronts, and we need better metrics on all fronts.
Mariana?
I mean, of course we shouldn't just kind of have these blanket words, short-termism. That's the whole point of then going into the details of things like share buybacks and actually, again, not just saying to ban them altogether, but to see when they're being wrongly used. And it's precisely in the case of the pharmaceutical sector, for the reasons that Jim said, that it's, kind of a scandal just how much they're being used. The share buyback expenditure is often much more than the R&D expenditure. And, companies like Amgen and Pfizer that have engaged in massive share buybacks, that's precisely the kind of, area where you could say that the 40 billion budget of the U.S. taxpayer coming out of the National Institutes of Health, which helps produce, alongside, of course, the private sector, pharmaceutical innovation, the drugs, that come out, that itself should be conditional, right? I mean, if you're going to access this huge public investment in drug innovation, then you should make sure you're also not only co-investing, but having a conversation of the kind that Jim was talking about, also in terms of that directionality. And I do think there's an assumption that Rebecca, which I'm very happy to speak to you about openly because I really value your work, that when you do the share buybacks, that somehow then goes back, into the economy. What we've actually seen is that the profit share globally is at record level, because what those, mechanisms do, it increases profits, but those profits are not being reinvested back in the economy.
All right.
So we've had a fall in investment at the same time that you've had an increase in profits, especially and not only through measures like this, which, as Jim said, the increased share prices, stock options, and executive pay.
OK, we're going to talk about how we can overcome some of these issues in just a few moments, though. We'll be talking and taking questions from journalists. But first, as I say, let's talk about how we overcome some of the obstacles that you have presented. Jim, let me start with you, because Tony Blair, via his Global Institute, would like to see the Companies Act replaced after the pandemic, so that organisations are obliged to think more long-term. Do you agree? Is this something government should look at around the world?
Well, I'm going to contradict myself. I agree with the spirit, but I'm not sure that I really would go to these simple distinctions of short and long term. I mean, markets are powerful, and you don't want to disincentivize the functionality of markets to essentially make them a lot more illiquid, and they can't do some of the more few useful things they do. And so one has to be very careful. But in terms of the spirit of it, I completely agree with it, which is why, as I say, at Chatham House, we are really trying to encourage and be in the middle of a much bigger shift in culture to where business, in whatever sector it is, and of course, bring it back to this one here on energy, are truly motivated by their remits from the society they live in to optimize a number of goals, which, by the way, could include things to do with issues of remuneration and gender representation and so on. But certainly to get away from just pure maximization of profit, which on a quarterly basis, frankly, I know from great experience, given my time in it, it just boils down to very, very clever balance sheet management, and has ultimately, quite often in many quarters, nothing to do with how much is being produced or sold.
Ayla, where do you sit on this?
Well, I look at it from a pragmatic point of view. I think the society has to set the rules, and then you try to make your business and you make your profit as much as you can. But society has to set sort of the limits, and one of these new limits that we are discussing now is exactly these environmental aspects, and which are getting tighter, hopefully, and other kind of rules about the tax rules and so on. So we can't be against business. Business is what makes our economies turn around. But those businesses will have to function within certain limits, and then you try to make the profit in a fair manner, whether it's short-term or long-term profit. But if you obey with the rules, and if you are sort of respecting the society and privatizing your profits and then just socializing your environmental or social bills is not the way to do it.
Right. I mean, Ayla talks about it doing it in a fair way or in a fair manner, Rebecca. I mean, that will mean different things to different people. I mean, do you need some more stringent levers to not coerce exactly, but encourage companies to abide by the rules that Ayla was talking about?
Absolutely. I think we need a strong climate regulation. I think we also need strong legislation in the social sector. My totally out there idea is that business should be actively lobbying for tighter regulation and better rules. So I completely agree with Ayla that we need to change the rules of the game so that when companies maximize, they do the right thing. And that means, and Jim has referred to this, that means really addressing some of the major institutional problems we face worldwide and the shift to populism and the shift to short-termism amongst governments. So I think that business should be playing a strong collective role in improving global governance on this front.
Right, but Mariana, with the best will in the world, we're in the middle of this pandemic, we're in the middle of a global recession. Is this really the time for businesses to take on more burden, as some of them will see it? Will they be open to these sorts of ideas?
Well, I think the problem is that even you keep coming back to the language of the past, which is a burden. Everything we just tried to do for the last half hour is to say, stop talking about like a burden, but as you know, the future, and if you get left out, you're going to have problems. And your question for this part of the session, I think, is about practical tools. So I would just like introduce one practical tool, which I'm kind of very proud to have helped get through in Europe, which is this idea to stop just having these kind of blanket policies to help, for example, small companies or particular sectors, or even to look at green just in terms of renewable energy, but to really think about missions and moonshots that are much more targeted. So one of the examples we gave in kind of pushing through this new instrument, which is called missions, was, if Europe had 100 carbon neutral cities by 2030, you could start thinking of that as the target as opposed to SME policy or sector level policy. And, if you look at all the different sectors and businesses within those sectors that would have to innovate and invest towards that goal, that would include, businesses in the construction sector, energy, real estate, food, mobility, et cetera. And then the real challenge for governments that I work with is how do you then redesign all these really static instruments like procurement, grants, loans that are just kind of very linear and kind of focused on little categories to actually catalyze and crowd in all sorts of experimentation in the private sector to fuel, possible solutions for those goals. But these really have to be intersectoral. And the multiplier effect, this is where, again, taking it away from the burden language, the multiplier effect for these kind of mission-oriented policies, which are, again, intersectoral but focused on concrete goals, like getting the plastic out of the ocean, is higher. It's like 4 times higher than the normal multiplier, which is just kind of looking at one little part of the economy.
All right. Well, no more burden language from me. I have been told there by Mariana. Jim, let's look at how lockdown might have affected businesses. It might have taught them to operate more sustainably. For example, deglobalising their supply chains, cutting back on travel, or using new technologies. Is that sustainable, though, in itself for global businesses, particularly on the issue of travel?
Having been active in business, particularly finance, for over 30 years and having been in the centre of quite a few crises, I'm very trained in this never let a crisis go to waste. And actually, I have my own personal case. Obviously, the whole BRIC acronym thing came to my mind within a fortnight of 9/11. So I do think how individuals, how all of us here talking and how business leaders and how national leaders respond and think objectively and opportunistically during a crisis is probably the mark of the next era. And there are a lot of things to really worry about this crisis, but I think there are some things that one can see as possibly taking us to a better future.
Ayla,
the whole shift to flexible working is opening up the possibility of true improvements in service sector productivity, which I think we never dreamt we could achieve after hoping for them 30 years ago, and here we are. They're with us.
Right.
And I could come up with a number of other examples. But on green policy, I'll say it again. It looks to me as though the markets are prepared to reward those that are going to be the boldest.
Right.
And government should make sure that becomes the norm.
Ayla, do you think, though, some of the new ways that we are working, so a reduction in flying, working from home, that has an impact, of course, on transport systems around the world too, and our city centres. Do you think they're permanent or semi-permanent?
I would say it's semi-permanent. I think I've been talking to a lot of, our bankers, our peers, our clients. That this is low.
No, we've got you. We've got you.
Most seem to think that this is semi-permanent. Yes. Most seem to think people I talk to that this is semi-permanent in the way that we will not go back to our old ways, but we will not stay like this totally grounded either, but somewhere in between. But I think it's been very helpful to see that this actually can be done like this. But I wanted to say about the role of finance in general is that. One thing is to have a political agenda and try to get all the governments of the world to agree on something, which is a tall order in any circumstances, let alone today. But finance has started to look into these things, and investors, large institutional investors, they ask questions, banks ask questions from their clients. What are you doing in the environmental regard? What are your practices? What are your policies? What are your safeguards, etc., etc.? And
Ayla, I think we might have... No, it's all right. We've still got comms to you if you want to finish that thought.
Sorry. Can you hear me now?
Yes, I can. Finish your thought.
Yes. So I just wanted to say that now that the money is talking, now I think even the most skeptical CEO, who is most short-termist in the world, will have to listen just because the largest institutional investors in the world are asking these questions. So finance is actually accelerating this, while the political agenda may be much slower to pick up, but I've seen in finance in the past 5 years a tremendous move. And well, are we there yet? No, of course we are not. But I think the fact that finance and the people who sit on the money start to ask these questions is actually accelerating this change.
Thank you for a fascinating discussion. Don't go anywhere, apart from Jim O'Neill, who has to leave us now. Thank you very much. Nice to see you again. Don't forget, coming up later today is our final session, Closing the Circuit, with opening remarks from former Australian Prime Minister Kevin Rudd and another fantastic panel. Following that, we'll be joined by Ethiopian Prime Minister and Nobel Peace Prize winner Abiy Ahmed in conversation with Bertrand Badre. Now, it's time to open things up to journalists from around the world. We're going to go first of all to Canada, and the journalist there is going to introduce himself and give his question.
Oh, good day. Thank you for the discussion. My name is Ryan McDonald. I represent the Globe and Mail in Toronto, Canada. I cover the environment, climate change, natural resources, and energy here. I suppose my question relates directly to something that Ella was just saying, and it has to do with large asset managers. I'm thinking specifically of institutional investors, but also players like BlackRock and Goldman Sachs, who put aside billions to invest in ESG plays. I'm wondering, are they not also facing a major supply squeeze? And specifically, can they find enough sustainable stocks to park their billions?
Rebecca?
No. That's why they're looking hard at other firms and trying to persuade them to become more sustainable. It's one explanation for why the leading edge firms are seeing their valuations rise so quickly, is because there are comparatively few of them. So the big asset managers like BlackRock that I'm aware of what they're doing, they're focusing hard on the opportunities lower down the portfolio. After all, from a financial perspective, it's one thing to leap on a firm like Tesla that everyone already knows about and is already out in front, but you're better off if you can identify those firms who are likely to make very significant progress in the next 5 years. So I don't think that's inherently a problem, but yes, the supply of really green stocks is limited, but there's lots of opportunity in the rest of the market.
Comment from you, Ayla?
Well, I work in fixed income, but the same goes here. There seems to be much more demand than there is supply, and then those assets are quite tightly held by the people who buy them in the primary market. So there's definitely room for more and search for more, and every new name is very warmly welcomed.
Mariana?
Oh, just about to have a drink.
Sorry.
So, I mean, if I could just broaden out the question, I mean, one issue is what is the relationship actually between finance and companies, you know, because we talked a lot about government before. And the sectors I've looked at, like, you know, the biotech sector, you know, really reveal how finance isn't neutral. So even with venture capital, which, you know, is often cuddled up to be the kind of like the good kind of finance versus, say, private equity and, you know, hedge funds, the fact it was so exit driven around buyouts and IPOs actually created a lot of rush. And so again, this does come back to what is the form of finance that we actually want in order to galvanize that kind of long-term sustainable growth of companies. And we should be careful because we're starting to see in the clean tech sector the same kind of dynamic we saw in biotech, and by the way, also in the space tech area. So lots of PLIPOs, productless IPOs that are rushed.
Ryan, does that answer your question, or would you like to follow up?
Oh, indeed. I'm also just wondering how we see asset managers pricing climate risks into their decisions and portfolios. I mean, is there adequate space there for them to do such?
Who would like to take that? Oh, well, if no one's going to offer, I'm going to ask. Rebecca.
It's such a good question that I really didn't want to answer. How you price in climate risk is so much in flux at the moment. The good news is it's clearly a significant bottleneck, and there's an enormous amount of energy and attention going into this area.
Okay. Mariana?
I mean, what's interesting is I find that we don't even know how to do it with much easier things, right? I mean, just thinking about, so I'm currently working with London, a particular neighborhood in London, about thinking how it thinks about investments. And, you know, governments aren't very good, for example, at thinking about the difference between a short-term and a long-run cost. So it costs more to, imprison a kid than to properly educate them. And so, that's one of the issues in terms of how are we actually calculating risks in the climate space in terms of that kind of short and long-run cost, which Nick Stern, of course, wrote about in his first report when he said the cost of not acting is much higher. And so if you transform that cost into a risk, the risk of not acting is actually higher than, giving it a try. But then the question coming back to, our conversation is how do you look at it systemically? So it's not just about one company taking on a risk, but also how they are de-risked and helped to kind of, take on that higher level of uncertainty by, for example, governments that are going to support them.
Ayla?
Well, I think there's a lot of time and effort that's going into this now. I mean, the IB, we are working on our own models. Commercial banks have their own models or are working on them. Central banks are looking at this from the systemic banking risk point of view, but there is no uniform way of dealing with this. It's very much proprietary so far, as far as I'm aware.
Thank you all very much for that question and answering that question from Ryan. We're going to take this question from Nicole Johnston, who is the London correspondent at CGTN. Her question is, what impact is the government's 2050 net zero emissions target having on businesses already? Is that goal still attainable in a post-COVID business environment? Ayla?
Sorry, can you repeat the question? I'm having trouble with my line.
No, not at all. What impact is the government's 2050 net zero emissions targets having on businesses already, if any? And is that goal still attainable in a post-COVID business environment?
Well, I think it's a tough target. We all have to work on it. I'm not looking at things from that perspective in my daily job, but what I do know that there's a lot of effort is going into that direction. I think we can't just waste any time anymore in discussing this kind of questions. Exactly like, can the businesses afford to do this? I think it's a question of they have to. It's like asking, well, can you afford to pay your employees? Well, obviously they have to, unless they want to close their business. So it's not a question of if, it's just a fact that you have to deal with.
Right, but do you think, Mariana and Rebecca, that the targets are actually attainable? I mean, I hear what Ayla's saying, and you've all sort of said that kind of thing, that it's not a choice. But if people don't respond immediately, are those targets attainable? Rebecca?
They're technically attainable. Whether they're politically attainable is another thing. We face a massive collective action problem. Of course, we need to get to zero by 2050 to keep our climate reasonably stable and our economy reasonably strong. But individual firms are still faced with some tough trade-offs. And so we need policy and we need pressure and we need collective action to make sure everyone moves absolutely as fast as they can.
Mariana?
Yeah, I mean, I would agree. There's the politics and there's the kind of technical. And on the politics side, that's, I mean, I do think that governments, at least right now, in terms of the pressures they can put on business, and that includes transnational organizations, have a really strong negotiating hand. The leverage that governments currently have, because they're putting in trillions globally into the system, to a large extent in many countries also bailing out sectors, that creates actually a potential kind of real partnership, which is, again, comes back to those conditionalities that we talked about before, which are happening. It's quite extraordinary. There is heterogeneity between countries, and some countries have taken the opportunity to create a very different type of discussion. Instead of just handouts, guarantees, and subsidies, these now become conditional on carbon reductions. And that doesn't mean that a company today has to reduce its carbon, because of course they have other massive priorities because of the very difficult moment that we're living through, but they can sign contracts. There's always a contract for every penny that's given that make commitments that are real commitments. And 2050, of course, I actually think it should be 2030.
We have another question from a journalist in Hong Kong. If you could introduce yourself and where you're from and your question, please.
Thank you. My name is Bayani Cruz. I'm from The Asset in Hong Kong. We're the biggest financial magazine in Asia now in terms of ESG coverage. And we use a lot of the articles published by the panelists through Project Syndicate. Now, coming from Asia, we all know that this is the fastest growing region in the world right now in terms of wealth generation. And based on the discussion, it's obvious there's a disconnect between how we measure wealth based on the short-term valuations of the stock market and the long-term nature of sustainable investing. And it can be argued that unless we use sustainable investing as a means of measuring wealth, it may not be able to really achieve what it's meant to do, which is to finance climate change and all that. My question is it possible to address this disconnect, and how? I mean, is it realistic to be able to use ESG or sustainable investing criteria, for example, as an accepted means of measuring wealth for individuals and for companies?
Okay, Rebecca, do you want to take that one first?
Sure. My colleague George Seraphim recently founded a research initiative at the Harvard Business School called the Impact Accounts Initiative, which is all about putting into company accounts the effects they're having on natural and social capital as well as on financial capital. And the early results are incredibly promising. I mean, they show, for example, that nearly 25% of listed companies, the harm they're causing, just the environmental harm they're causing, is as much as 25% of their profits. And for some companies, it's more than their entire profit stream. And they're finding that these measures, of course, we can have discussions on, how precise are they, but they are pretty good and they are startling. So I'm very optimistic that we'll be able to develop a set of accounts that absolutely measures not just financial valuation, but natural and social valuation as well.
Ayla?
Yes, I think something like this is where the future may lie. You put a price to the natural capital, you put a price to the carbon that you use, and so on and so forth, and all of that, and then it all becomes numerical, which you can see. The current ideas that one should use sort of ESG ratings, I'm not a great believer in that at the moment, because they are so diverse that you can find for any company a good rating and a bad rating and everything in between. But this kind of sort of different kind of accounting, which actually takes into account the cost that you have to the nature, to the society as a whole, that's a very interesting perspective.
Mariana, do you share the scepticism, by the way, on ESG being a sort of firm measure?
Yes, I do. And that's why I think the interventions that were just provided really kind of would move that forward. But what I would add to that is that, given that the journalists used the word value, I think we need to first begin with understanding, or asking, what is value? And there's been this assumption in economics that value is created inside business, and then we just have to worry about policy kind of fixing any market failures that might come about from that. Instead, I do think that the word stakeholder value is really appealing to a different type of concept where value is co-created by different types of actors. Definitely, if you look at the health sector and the green sector, you have public actors, private actors, nonprofit actors co-investing, taking risks, and then they should be also sharing the rewards. But how we actually measure that collective value creation is something that I also think we need to be thinking about. So again, it goes beyond just within the business, but between economic actors, big if, we agree that value is co-created.
Well, Biani, I hope that answers your question. Biani in Hong Kong there. That's all we have time for now. Thank you so much to all of our guests, Mariana Mazzucato, Rebecca Henderson, Ayla Cravey and Jim O'Neill earlier on. Now, don't forget, if you'd like to join the conversation or help spread the word, please do get involved on social media using the hashtag #TheGreenRecovery. Now, don't go anywhere. We'll be taking a short break before our second and final session of the day, where we'll be looking at energy and whether there really is a path towards a greener, more sustainable future. We'll see you then, and thank you very much for watching and sharing.